Hey everyone, Coach Investor back to another video for you today. So let's talk about SoFi. Then the next video is probably going to be PayPal, and then maybe if you want AMD. But SoFi right now, incredible report, and that's why the stock is up 7 to 8% or so at the time of making this video. Now this report was amazing because one, numbers look great, they beat on their own guidance, and they even increased full year guidance as well. And in the current market environment, this is very, very rare, but this just shows how strong of a company SoFi is. Execution here has been incredible quarter over quarter, even with headwinds such as the CARES Act. Now, before we jump into this report, if you want to support this channel, do check out the link down in the description or in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So, first things first, members. Second highest quarter for new members, increased by 450,000 quarter over quarter and is now at 4.3 million. That's up 69% year over year. Now look at last Q2. That one was already up 113% on a 59% increase the year before that. So quite tremendous growth here. Then if we look at product, that is also increasing very, very fast, 79% year over year, 702,000 extra new products quarter over quarter has now reached close to 6.6 million. Now, obviously, the products we're going to talk about a bit later because they are moving away from relying solely on lending. And that's very, very important. Now, as for Galileo, one of the favorite parts of the business that has reached 117 million accounts has increased 48% year over year. Last year, that increased 119% year over year, and the year before that, 80%. So you see it increases quite a lot on a very, very good same quarter in the prior year. And this is what I mentioned just before. So lending and financial services product. On the left, you see the lending product that increased 22% to 1.2 million. And then on the financial services product, you can see here, obviously, a huge growth that increased 100% year over year to 5.3 million. And that's very, very important. And this just visually shows it a bit better. In Q2 2020, the ratio of financial services to lending products was below 1x. Then the same quarter 2021, that was 2.7x. And now this quarter, this year, that's 4.5x. So everybody's saying, oh, they rely solely on lending. Well, they have not been following the business for a while. Now, as for adjusted net revenue, that grew 50% year over year to $356 million. Adjusted EBITDA of $20 million and 81% year over year growth. Tremendous quarter. It really surprised me. As for the last 12 months, we sit at an annual adjusted net revenue of $1.235 billion and annual adjusted EBITDA of $44 million. And as you can see, obviously, they've made a nice switch back in 2021. And even with headwinds in the last 12 months, it has been doing very, very well. And I do assume that once those headwinds turn into tailwinds, that number should increase significantly. And this is basically where they show us how good this quarter was. So the Q2 guidance was between $330 and $340 million, came in at $356 million. So they beat on the upside by $16 million. Adjusted EBITDA to be between 5 and 15 came in at $20 million. So beat on the high end by $5 million. Now, as for the second half of the year, and I believe this is the first time they mentioned second half and not next quarter. So they expect net revenue to come in at $830 to $835 million, representing 49 to 50% year over year growth. Adjusted EBITDA to be between $75 and $80 million. Adjusted EBITDA margin 9 to 10%. Now, as for the full year, as I mentioned at the start of this video, you can see your prior guidance. While percentage-wise, well, it's not really a big change, right? From 1.505 to 1.508, not that much of a change on the low end, and then the same thing on the high end as well. Overall, they expect to grow annually 49 to 50%, and adjusted EBITDA margin to be between 6 and 7%. Same thing here, not much has changed, but they did guide a little bit above their own guidance that they gave us previously, so it's a positive. Now, I know this interests some of you, so stock-based expense here has increased quarter over quarter and then year over year as well. But quarter over quarter, not that much of a big increase anymore. We've seen the huge jump, obviously, Q1 to Q2 2021 and then Q2 to Q3 2021. And then after that, it's been slowing down a little bit. Let's see if that normalizes over time. Now, again, I think we should all get a reminder that there are still headwinds, especially because of the CARES Act, but that should become a tailwind in the back half of the year, unless they push it again and again and again. But as you can see, the business is doing quite well, even with those headwinds. Now, obviously, I'm filming this right before the call starts. So if there's something crucial or interesting that they say during the call, to me, this print was enough information for me. But if there is something special, I'll write it in the pinned comment. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the PayPal video. Bye bye.